Welcome to our deep dive into Vision Marine Technologies Inc., ticker symbol VMAR. As of December 23, 2025, VMAR is trading at just 0.29, a dramatic drop from its 52-week high of $39. In this video, we'll break down the technical analysis, explore what's driving this severe downtrend, and discuss what the future might hold for this embattled stock. Whether you're a trader, investor, or just curious about market dynamics, this analysis will give you a comprehensive understanding of VMAR's current technical landscape. Start with an executive summary. VMAR has experienced a catastrophic decline, losing nearly all its value in just a few months. The current price hovers near its 52-week low, and technical indicators are overwhelmingly bearish. However, a recent explosion in trading volume hints at a possible capitulation phase where sellers may be exhausting themselves. This could set the stage for a potential bottom, but caution is warranted. The overall trend remains negative, and risk is extremely high. Examining the price action, VMAR is in a clear and persistent downtrend. The stock has been making lower lows and lower highs, a classic sign of sustained bearish momentum. In early December, the price crashed from above $1 to below 30 cents with a sharp gap down signaling panic selling. This relentless decline has left the stock deep in negative territory across all timeframes, and there's little evidence of a reversal so far. Trend for VMAR is unmistakably bearish. Every timeframe from short-term to long-term shows a strong downtrend. The stock's inability to hold any support levels and its consistent decline reinforce the negative outlook. For traders, this means the path of least resistance is still downward, and any attempts at a bounce have so far been short-lived. Looking at moving averages, VMAR is trading well below all major benchmarks. The current price is under the 5-day, 20-day, 50-day, and especially the 200-day simple moving averages. This confirms the intensity of the bearish momentum. The distance from the 200-day average is particularly striking, highlighting just how deep this correction has been. The infamous death cross, where the 50-day average falls below the 200-day, has already occurred, cementing the bearish outlook. The short-term, VMAR's price of 0.29 is below both the 5-day and 20-day simple moving averages. It suggests that even recent attempts to stabilize have failed. The 5-day SMA sits at 0.451, and the 20-day at 0.758, both far above the current price. Such a gap between price and short-term averages typically signals persistent selling pressure and little sign of a near-term recovery. Zooming out, the medium and long-term moving averages paint an even bleaker picture. The 50-day SMA is at $1.15, and the 200-day SMA is at $4.12. With the current price so far below these levels, it's clear that VMAR is in the midst of a severe correction. The established death cross further confirms that the long-term trend is decisively negative, and recovery would require a significant shift in momentum. Death cross is a technical term that describes when a stock's 50-day moving average falls below its 200-day moving average. This is widely regarded as a strong bearish signal, indicating that downward momentum is likely to persist. In VMAR's case, the death cross is well established, reinforcing the view that the stock is in a prolonged downtrend. Relative Strength Index, or RSI, is currently at 34.8 for VMAR. This reading is just above the oversold threshold of 30, suggesting that the stock is experiencing weak momentum but may be approaching a point where selling pressure is exhausted. While this doesn't guarantee a reversal, it does indicate that the stock is nearing oversold territory, which sometimes precedes a short-term bounce. MACD, or Moving Average Convergence Divergence, is another key momentum indicator. For VMAR, the MACD value is -0.248, which is below the signal line at -0.215. The histogram is also negative. This configuration confirms that bearish momentum is still active and there's no sign of a reversal yet. Traders often look for the MACD to cross above the signal line as a sign of recovery, but that hasn't happened here. Bollinger Bands are a popular tool for measuring volatility. VMAR's price is currently trading within the lower half of its Bollinger Bands, with the lower band at 0.07 and the upper band at $1.45. The wide distance between these bands, over $1.80, signals extremely high volatility. When prices hug the lower band, it often means the stock is under heavy selling pressure. Volatility is a key risk factor for any stock, and for VMAR it's off the charts. The average true range, or ATR, is relatively high compared to the stock's price, indicating that daily price swings are large and unpredictable. This kind of volatility can create both opportunities and risks, but for most investors it's a sign to proceed with extreme caution. One of the most striking features in VMAR's recent trading is the explosion in volume. On December 19 and 22, trading volume soared above 117 million shares, compared to less than 1 million earlier in the month. Such massive volume spikes during a downtrend are often interpreted as signs of capitulation, where sellers are rushing to exit at any price. This can sometimes mark the beginning of a bottoming process, but confirmation is needed. Capitulation refers to a point in the market where investors give up and sell their positions in large numbers, often leading to a sharp increase in volume and a steep price drop. This is sometimes followed by stabilization or even a reversal as the weakest hands have exited the market. In VMAR's case, the recent volume spike could be a sign of capitulation, but it's too early to tell if a true bottom is forming. Stochastic oscillator is another tool for gauging momentum. For VMAR, the %K value is at 2.74 and %D at 11.25, both well below the oversold threshold of 20. This suggests that the stock is deeply oversold, which often precedes a short-term bounce or a period of consolidation. However, in strong downtrends, oversold conditions can persist for some time. Support and resistance levels are crucial for understanding potential price movements. VMAR faces immediate resistance at 0.315, with further resistance at 0.451 and 0.758, which correspond to key moving averages. On the downside, support is found at 0.273, with the critical floor at 0.232, the 52-week low. If the price breaks below this level, the stock enters uncharted territory known as price discovery to the downside. When a stock breaks below its established support, especially a 52-week low, it enters what's called price discovery. This means there's no historical reference for where buyers might step in, making the downside risk unpredictable. For VMAR, a break below 0.232 could lead to further rapid declines as the market searches for a new equilibrium. Average Directional Index, or ADX, measures the strength of a trend. VMAR's ADX is at 29.05, which is well above the threshold of 25 that signals a strong trend. In this context, it confirms that the current downtrend is not only present but also firmly established. This makes any bullish reversal attempts even more challenging. VMAR is currently in what traders call a falling knife scenario. This term describes a stock that is dropping rapidly with no clear support in sight. Trying to catch a falling knife is risky as prices can continue to fall much further than expected. For VMAR, the combination of negative technicals and high volatility makes this an especially dangerous setup for most investors. Let's recap the major bearish signals for VMAR. The price is below all major moving averages, the MACD is negative, the ADX confirms a strong downtrend, and both the RSI and Stochastic oscillator are in oversold territory. These factors combine to paint a picture of a stock under intense selling pressure, with little evidence of a sustainable reversal at this time. Despite the overwhelmingly bearish outlook, there are a few signs that could hint at a potential turnaround. The massive spike in trading volume suggests capitulation, and the deeply oversold readings on both the RSI and Stochastic oscillator could precede a short-term bounce. However, these are not guarantees, and any recovery would need to be confirmed by a shift in trend and a reclaiming of key resistance levels. For aggressive traders, the current setup might present an opportunity for a speculative bounce. The 23 cents to 27 cents zone is a potential area where oversold conditions could trigger a short-lived rally. However, this is a high-risk play and strict risk management is essential. Most traders would look for confirmation before entering, such as a strong reversal candle or a break above immediate resistance. For conservative investors, the best approach is patience. Waiting for VMAR to reclaim at least the 20-day simple moving average at 0.758 would be a safer entry point. This would indicate that the stock has regained some upward momentum and is no longer in free fall. Until then, the risk of further declines remains high. Regardless of strategy, risk management is crucial when dealing with highly volatile stocks like VMAR. Setting stop-loss orders, limiting position sizes, and being prepared for rapid price swings can help protect your capital. Remember, in markets like this, preserving capital is often more important than chasing quick gains. It's important to remember that technical analysis is not foolproof. While indicators can provide valuable insights, they can't predict the future with certainty. External factors such as news events or broader market shifts can quickly change the outlook. Always combine technical analysis with other forms of research and maintain a flexible approach. Market psychology plays a huge role in extreme scenarios like VMAR. Fear and panic can drive prices much lower than fundamentals would suggest, while sudden bursts of optimism can trigger sharp rallies. Understanding the emotional drivers behind price action can help traders and investors make more rational decisions, especially in volatile environments. This analysis is provided for educational purposes only and does not constitute financial advice. Always do your own research and consult with a qualified financial advisor before making investment decisions. The stock market carries inherent risks, and past performance is not indicative of future results. Summarize: VMAR is in a severe downtrend, trading near all-time lows with extreme volatility and bearish technical signals. While there are hints of a possible bottom forming, the risk remains very high. Both aggressive traders and conservative investors need to approach this stock with caution, using sound risk management and waiting for clear signs of a trend reversal before taking action. Looking ahead, VMAR's future will depend on whether it can stabilize above key support levels and attract new buyers. Monitoring volume, price action, and technical indicators will be essential for spotting any early signs of recovery. Until then, the stock remains in a precarious position, and only the most risk-tolerant traders should consider getting involved. In conclusion, VMAR's technical picture is overwhelmingly bearish, with little evidence of a sustained reversal so far. While extreme oversold conditions and volume spikes can sometimes precede a bounce, the primary trend remains negative. As always, approach with caution, stay informed, and prioritize capital preservation in volatile markets like this.